Hello and welcome once again to Real Estate Reality, your live stream with Darren and Joe over at Urban Hillsides Real Estate. Thanks for joining us this afternoon. It's Tuesday, it's 2 p.m., and we are going to report and rant and complain, whatever, for the next 45 minutes to an hour about real estate this week. We're going to go through the usual solds in the last 7 days, also new listings in the last 7 days, and then we're going to pick out a topic and talk about it because obviously we feel it's important, and it's important for you guys out there as potential buyers and sellers in the market. So, gee, Darren, how you doing, man?
I'm doing great, man. For some reason, when you use that word rant there, I thought of myself.
Well, I'm kind of picking up where we left off, in the last couple conversations today.
Sure, man. Oh, I know. Yeah, it's so much going on in real estate all the time. The weekly update is justified. Yeah. Speaking with a client today about inflation and gosh, how the market's changed so much in just a month.
Yeah.
Really. Which is why we're bringing back the same topic for a second time in a short time.
Well, I hope that everybody understands that we do want to find new and interesting things, but sometimes the usual needs to be highlighted because it matters at this particular moment. So I know we've talked about interest rates before and how it all relates to the market, but some new things have happened, right? Interest rates have gone up over a historic. Let's see, what did it say? 2019, it was at 4% last time. So now Here we are, 4% again. All right. Well, look, before I get too far deep into it, let me go roll through this disclaimer. Darren Hubert and Joe Cloninger are real estate agents at Avenue 8 under the Urban Hillsides brand. All opinions expressed by Urban Hillsides or guests on this video are solely their opinions and do not reflect the opinions of Avenue 8. You should not treat any opinion expressed by Urban Hillsides as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of Urban Hillsides team's opinions. The video is for informational purposes only. All right. So, it's a busy week for us, isn't it, Darren? We had a really good open house turnout over the weekend out in Glendale.
Yeah.
And no sooner than we listed it, we're already looking for offers due 2 p.m. today.
Yeah, time has passed.
Yeah.
It's all good. So, and it's, we've got some aggressive offers and we'll see where it all goes. Yeah. Things move fast in this market.
Yeah. So, let's jump into it. So, for this week, we're going to talk about mortgage rates. Let me share my screen and see where I can put this thing. Share screen. Let me share this screen and let me put this over here. Sorry, man. Just got to talk through it. I talk to myself a lot, so just.
Where's the headphones, man? I don't see the headphones.
Oh my gosh! Thanks for pointing that out, man. Hold on. Oh, here we go. But it's funny. I don't hear any feedback. Do you hear any feedback?
No feedback, man.
Here, let me do it because I want to be just like Darren. Hold on. Let's see, guys. Yeah, that gives me that pro look, doesn't it? Let's see.
Is that what it is?
I don't know. I feel a little naked without him now.
It's all about branding, man.
All right, there we go. Okay, so can you talk a little bit? Can you hear me?
No, I'm messing with you.
Bastard. All right. Well, look, so here we go. We're going to talk about mortgage rates rise above 4% for first time since December 2019. And this is from our friends at Inman.com. Inman.com is a real estate industry site a lot of real estate agents use. So I will try to get this on the chat. You might be able to get in. I think they give you a couple freebies to check it out. So I'm just going to go ahead and post it. But let's get into it. So mortgage rates rise above 4% for first time since December 2019. FHA borrowers can expect to pay even higher rates, but lenders are offering discounts on jumbo mortgages too big for Fannie and Freddie. according to new Optimal Blue mortgage market data. So again, this is not only from Inman, but Optimal Blue mortgage market. The prospect of more severe Fed tightening has spooked bond market investors, pushing rates for conforming 30-year fixed rate mortgages above 4% for the first time since December 2019, according to a daily index of rate lock data compiled by Optimal Blue. The Optimal Blue mortgage market indices also show that while first-time buyers seeking FHA-backed mortgages can expect to pay even higher rates, lenders are offering discounted rates on jumbo loans that are too big for purchase by Fannie Mae and Freddie Mac. Do you want to unpack that a little bit, Darren, for some of us?
Sure, man. So, yeah, the 10-year rate is what is the biggest factor to determining mortgage rates. A lot of people will tie the Fed rate to the mortgage rates, but that's a shorter term rate. But the expectation of, the 10-year note and its value in the future has moved up pretty rapidly. Inflation is tied to that. And mortgage, we're talking about mortgage lenders giving breaks on their fees because their refinance business is falling off the table. Right. So the last data showed. So they're really hustling to try to get more business in, and they're willing to give discounts to do that. They have more control in the jumbo market than they do than the mortgage-backed securities that Fannie and Freddie will purchase. So that's why they're highlighting that component there.
All right. Optimal Blue's lock data shows rates on conforming 30-year fixed-rate mortgages eligible for purchase by Fannie and Freddie averaged 4.071% on Thursday. So that was last week, while lenders were offering jumbo loan borrowers rates averaging 3.696%. FHA borrowers, who are often first-time home buyers with lower credit scores and little savings for down payments, paid the highest rates, 4.122% on average. According to Optimal Blue's data, rates on the workhorse 30-year conforming loan hit an all-time low of 2.77% on December 31, 2020, when the Federal Reserve was buying $120 billion in treasuries and mortgage-backed securities every month to support the economy during the pandemic. The Fed announced in November that it would begin tapering those purchases, a process that it will complete this month, setting the stage for policymakers to begin raising short-term interest rates in March. Fed policymakers have been telegraphing their intention to raise the short-term federal funds rate 6 times this year, 1/4 of a percentage point at a time. But bond investors were startled Thursday by a U.S. Department of Labor report showing the consumer price index rose 7.5% in January, the largest annual increase since 1982. Yikes. After that report came out, St. Louis Fed Chair James Bullard fueled investor concerns, telling Bloomberg News that he would support raising the federal funds rate by a full percentage point during the first half of the year, of rapid increase which would entail implementing the first half-point rate hike since 2000. I'd like to see 100 basis points in the bag by July 1, Bullard told Bloomberg. I was already more hawkish, but I have pulled up dramatically what I think the Federal Open Market Committee should do to fight inflation. Bullard also said he wants to begin shrinking the Fed's nearly $9 trillion balance sheet during the second quarter. Minutes from the committee's December meeting showed almost all members agree with Bullard that it would likely be appropriate to initiate balance sheet runoff at some point after the first increase in the target range for the federal funds rate. You want to unpack any of that? That's a lot of words. That's a big sentence.
Yeah, it is a lot of stuff. So first off, it's very interesting, and this has happened, multiple times over the last couple years, where it costs less money to borrow higher amounts.
More money.
So, right. The jumbo is, a much higher loan amount. And as it works down, the rates are increasing. So that's interesting. Usually people are trying to scoop in under a jumbo number. But for those of you out there, and many people in our market are getting jumbo loans, you might want to consider putting less down. to get
Mhm.
a lower rate. So at least understand where those numbers are, where the transition is, to determine what makes sense. Again, a conversation with a good lender who's aware of all this should be able to advise you on these components. And we'll backtrack and evaluate our client base and make sure they're following up on these details. So then as far as stopping buying the mortgage-backed securities, that, as they said, has been mentioned many times. The market knows it's coming. And what'll happen there is, rates will rise because it basically puts a little more risk to those who are holding them. The Fed isn't insuring all of these and just repurchasing them. So rates are expected to rise because of that. But also the market anticipates. So some of that is built in with them knowing it's coming. It's not going to all of a sudden change when it happens.
Okay. Thursday's inflation numbers and Bullard's reaction to them sent 10-year Treasury yields, barometer for mortgage rates, climbing 10 basis points Thursday, breaching the 2% threshold for the first time since the summer of 2019. All right, here we go. Impact of rising rates on home prices and sales. Fannie Mae's latest national housing survey showed the percentage of Americans who think it's a good time to buy a home fell to an all-time low in January, with rising home prices and interest rates making homes unaffordable for many would-be home buyers. In their most recent forecast, Fannie Mae economists predicted that many home buyers will be priced out of the market this year, and that sales of existing homes will fall 3.2% to 5.945 million. That would still be the second best year since 2006. And sales of new homes are projected to grow by 14.9% to 885,000 as builders start putting homes now under construction on the market. Fannie Mae economists expect that home price appreciation will remain strong but decelerate in 2022 as worsening affordability will slow home price growth from a peak of 18.5% during the third quarter of 2021 to 7.6% by the end of the year. That forecast assumed that rates on 30-year fixed-rate loans would not rise above 3.5% this year, an assumption that now looks out of date. But rising rates could also supercharge the housing market ahead of the spring home buying season, as the fear of missing out on low rates could get buyers off the fence, according to a recent analysis by Mark Fleming, chief economist for First American Financial Corp. First American's analysis of the potential impact of rising rates shows that with rates at 4%, home buyers already have $52,000 less housing buying power than they did in November. How interest rates impact home buying power. So there's the chart you guys can look at. It's pretty dramatic. Similarly, a recent analysis by Redfin estimates that when mortgage rates were at their all-time low of 2.71%, a buyer who could afford to make a $2,000 monthly payment, including mortgage, taxes, and insurance, could afford homes priced up to $425,250. With rates at 4.1%, the same buyer could not qualify for houses priced above $375,750, a difference of nearly $50,000. With home prices and mortgage rates increasing, we might start to see buyers trading space for smaller homes that are closer to amenities, said Kristen Lopez, a Redfin agent in Boise, Idaho. So instead of purchasing large homes in the suburbs, many buyers may settle for a smaller home or even a townhome closer to the city, and then buy a bigger house later if they need more room. Jumbo loans available at lower rates. Optimal Blue's lock data shows that while rates on conforming 30-year fixed-rate mortgages eligible for purchase by Fannie and Freddie exceeded 4%, jumbo loans were available at better rates. Historically, that's not always been the case. During June, July, and August 2020, Optimal Blue data shows rates on jumbo mortgages averaged 3.29%, 26 basis points higher than the 3.03% average rate for conforming loans. Since then, the spread between jumbo and conforming loans has flipped and has been growing wider this year. During January, rates on jumbo mortgages averaged 3.39%, 27 basis points lower than the 3.66% rate for conforming loans. Thanks to rising home prices, Fannie and Freddie are now allowed to back single-family mortgages of up to nearly $1 million in some high-cost markets. Fannie and Freddie's 2022 baseline conforming loan limit was increased to $647,200 in most areas of the country, with a ceiling for one-unit properties in high-cost areas of $970,800. But Fannie and Freddie's federal regulator is requiring them to implement new fees on second homes and high-balance loans exceeding the baseline conforming limit. That means a growing number of home buyers may find that it's cheaper to do business with private lenders who fund loans without Fannie and Freddie's backing. Any comments from there?
No, I think, the one comment I'll say is that as the mortgage industry is impacted with lesser refinance or more difficult credit, pay attention. We will start seeing more product, meaning different options and different ways to verify income. And we might see some more spectrum of ranges with more limitations or higher fees. It might be an opportunity for, as they mentioned, private lenders to come in and offer, have a better position. And so the mortgage products will evolve over the next 6 months to a year, and they're already starting to happen now.
All right. Okay, mortgage rates by credit score and LTV. That's loan to value. So mortgage lenders are becoming more willing to loan to non-prime borrowers. There you go. With home loans provided to subprime and near prime borrowers up 17.6% during the third quarter of 2021, according to TransUnion. Since rates will vary by lender and the borrower's credit score and loan to value ratio, it's smart to get quotes from multiple lenders. While non-prime borrowers can expect to pay higher rates, Optimal Blue data shows that borrowers with excellent credit scores can obtain rates below 4% on conforming loans when making a down payment of at least 20% to keep the loan to value rate or ratio below 80%.
Right. So it's a time to pay attention, be aware, make sure, if you're getting a referral from an agent, it's a good source. And do a little shopping to see what products are out there. And what's coming to mind for me is 2002 to 2005, as the products just continued to ramp up to try to feed that industry, they just went off the rails. So
I was going to say, even with the new product this time around, it's not going to be like that.
Not off the rails. I think there's two things. Number one, there's some regulation in place that's going to limit it. Well, certainly Fannie and Freddie aren't going to buy that extreme product that they were just buying. And then people got burned. If that's too fresh of a wound for them to get that crazy, I hope at least. But be aware, understand, read the loan terms. Usually they're pretty basic, but in these times they might start getting more evolved.
Yeah. And, I just wanted to kind of end out on a comment that one of the real estate agents made to this. And it's, I think, very, very true. Note to buyers, don't let this information take you out of the market. Rates are still fantastic. You still have strong buying power when compared to what rates were like over the last course of 25 to 30 years.
Right. So the rates are still low. He's absolutely correct. The prices are high.
Right.
That's right. So, don't let the rate stop you from buying, for sure. I agree with that comment. But,
Okay. All right. Well, there you have it, guys. If you have any more questions about this, let us know. We're more than happy to talk about it with you. Let's see here. Okay. All right. So we are off to Sold's top picks. And what that means for us is top picks for buyers and top picks for sellers. So let's take a look. I'm going to go ahead and open up my MLS. There we go. And we're going to look at Sold's. And first off, seller wins. Let's go here. Blah, blah, blah. There we go. Sold listings in the last 7 days. Okay. So, Darren, I was going to start at 1722 Ashmore Place.
Sure.
See, we have 31 listings found that were sold in the last 7 days. So a little bit lower, I think, than last time.
Yeah, and 34 new. It's pretty balanced. So it's just a replacement of inventory there.
Good point. All right, where is it?
So yeah, Ashmore Place is an interesting spot. It's not a visible street in Echo Park. It's kind of an alley street.
Do you have to go down the hill and like the parking's up the hill?
Well, it's the parking is at the base, and then
at the bottom, right?
Yeah, right. I mean, it's a nice property with a detached additional square footage, but wow, I was blown away by this price.
Yeah. Well, let's take a look. You're seeing it running now, but it's 722 Ashmore Place, 2-bedroom, 2-bath, 759 square feet. This is definitely, I've noticed, man, a trend. These lower square foot properties, I think one just came out today, and it was like 600 square feet. It was already at 800,000. So pretty amazing, these small square foot places.
Yeah. Yeah, and it is often about bonus space on these small square foot places. There's another one that sold recently that had like a really done up shed.
Yeah.
So it's just about living in the spaces, indoor outdoor flow, and
you see that here.
Yeah.
I mean, look at this. Not that we really follow per square foot, but 2,000 per square foot for a little place is very impressive. It took 9 days on the market to sell. See, it started at 995,000, so quite a jump. What is that jump? That is wow, $605,000. And who did this? Let's see, Melinda Ray and Tracy Doe on the sell side, and on the buy side, Efron Smith, David Berg, and Brandon Smith. Took 3 people. Wow. So great. Congrats to the seller. It's definitely a seller win. No doubt about that. All right. Next is, we're off to, your neck of the woods, man. 2287 Baxter Street. This was a listing that started at 899,000, and it landed at $1,300,000 for a 401,000 increase. Let's see what somebody else saw. Let's see here. Okay. 2287 Baxter Street. This is a 2-bedroom, 1-bath. Again, 792 square feet. $1,300,000. It's on a 7,700 square foot lot. Took 9 days again on the market to sell. Started at 899,000 and brought to us by Sharon McHale at Remax Estate Properties, and on the buy side, Joanne Cervantes at Berkshire Hathaway. So where's the bonus space here? Yes, there it is.
It's attic.
Okay.
Yeah.
400 square foot converted loft. There
Yeah. Yeah.
All right.
This is about neighborhood.
Mm-hmm.
Definitely not about This is, I have to imagine it's going to be fully gutted and remodeled. So somebody just paid 1.3 for a full-on fixer.
Yeah. Well, it's interesting because I'm reading the agent remarks, and kudos to them. Of course, upper loft done without permits. Does say property shows deferred maintenance, and it'll be interesting to see what this turns into. Yeah, if that shed will survive in the back.
No, absolutely not.
I remember us looking at this when it was active. Yeah.
Sure, the whole house may go. I mean, it could end up being 4 units there, is my guess, in that neighborhood.
And it's flat. All right, in a good neighborhood.
Flat's
big. It's off Glendale, but yeah.
Yeah.
All right. Well, great. Another seller win on a fixer. Let's move to the next one here. We're going to go to 4209 Van Horn Avenue. 4209. There it is. Okay. This one looks fixed up a little. Okay. So 4209 Van Horn Avenue. This is in El Sereno. 3-bedroom, 2-bath, 1,094 square feet of living space, sold for $1,160,000. Lot size 6,500 square feet. That was a $285,000 increase over the list price that was $875,000. Again, days on market 9. Some sort of magic about 9. Brought to us by Ari Afshar and Narissa Minnick over at Compass. And on the buy side, looks like a couple, Nancy and Dan Marfisi at Sotheby's. So, any comments here? What do we got? Bonus space once again.
Of course.
Gosh, man.
A well prepped house.
Yep.
Doesn't look like it was a complete remodel. Just looks nice in an El Sereno neighborhood. I guess the comment is, now sells for we crossed the $1 million threshold. Now we're going up to the 1.1 threshold for 1,100 square feet in El Sereno.
Yeah.
Yeah.
Wow. All right. Well, another seller win. Let's move on. Let's see. We are off to 4442 Russell Avenue. Get over there. Russell Avenue. 4442. There it is. Okay, so this started at $1,199,000. It landed at a sold price of $1,475,000 for a $276,000 increase. Okay, so we are in Los Feliz. Let's see. 4442 Russell Avenue, 3-bedroom, 2-bath, 1,507 square feet of living space, sold for $1,475,000. It's on a 6,700 square foot lot. Took 15 days on the market to sell, and it started at a list price of $1,199,000. What else? Brought to us by Gina Isaac over at Normand and Associates, and Isaac Fast at Coldwell Banker on the buy side. What do you say? Once again, area?
Yeah, this is area again.
Right.
Probably, somebody it looks like they can move in and just exist in this space.
Yeah.
But probably some work to be done. So yeah, it's location. Sold this one.
Yeah. Great. Okay. All right. Awesome. So we will move now to actives. Let me go to actives, new listings, top picks. There we go. All right. So, I'm sorry. I forgot about buyer wins.
You have buyer wins. I was
gosh. Yeah. Let's give the buyers some love. Here we go. So, let's start at 4231 Newdale Drive. Bear with me. 4231. There it is. This started at $1,499,000. Sold price $1,450,000 for a $49,000 reduction. And I'm just whizzing by here. Sorry, guys. Okay, so this is in Los Feliz again. 4231 Newdale Drive, 3-bedroom, 2-bath, 1,785 square feet of living space. $1,450,000 on a 5,280 square foot lot. Took 58 days to sell. Wow. The original list price was $1,599,000. So they were shooting high. Brought to us by Laura Marcosian over at Coldwell Banker. And I do not see the buying agent. Not here.
Laura's a long time agent.
Yeah. 58 days, though. Why? What was wrong with this picture? Let's see. Just reading the description.
Yeah, not much was done to prep it for sale.
Right. Bad photos. Just
the house
bad
is
lighting.
Very divided. Doesn't flow well.
Mm-mm.
So although it could be a move-in ready, it's probably somebody's going to do some work on it. So I just think it was overpriced.
Yeah. Okay. Well, congrats to the buyers there. Can put put that 49,000 into improving it. All right, next one is on 5600 Aldama Street. This started at $1,295,000. The final price was $1,275,000. Let's take a look. Let's see, 5,600. Did I lose it? Where is it? Aldama. Oh, it just ran off the list. Let's see. I don't see it.
It comes up on my list as a pending. It's on my list, but it shows pending.
Oh, really? Well, let's skip it then. Maybe it went backwards. Let's go to Yosemite Way, 4315 Yosemite Way. All right. And let's see here. So this started at $1,200,000, $10,000 reduction, $1,190,000. Let's see if I can get to this here. All right. Uh, 4315 Yosemite Way. This is Glassell Park. 2-bedroom, 1-bath, 942 square feet of living space, $1,190,000. It's on a 6,600 square foot lot. Took 97 days on the market to sell. The original list price was $1,099,000. Oh, yeah. And then they went up to $1,200,000. Just couldn't decide. And here we are. This was brought to us by Nancy Metellitz of the 661, Darren. Not very close. And on the, let's see, Alyssa Banco, another listing agent. And on the buy side, Hazel Pereira of the 626. So somebody got a good deal. Not a huge reduction, but looks in pretty good shape. Beautiful tree in the back.
Yeah, it looks remodeled.
Yeah. All right. Let's see. All right. Next one, and the final one, is 1166 Montecito Drive. This really just zeroed out, went even at list price. $1,495,000 was the list and the sold price. Let's take a look. 1166. Do we know this house, Darren?
Yeah, we did. We were watching them build it when we were selling our house over on Montecito Drive last year.
All right.
Yeah, it took them a while to sell it, though. It was.
Yeah. God, it did.
Yeah,
Okay.
It took them quite a while to sell it.
So 1166 Montecito Drive, 2-bedroom, 4-bath, oddly enough. This must be some big bedrooms. 2,316 square feet of living space. Sold for $1,495,000 on a 7,600 square foot lot, mostly hill. Days on market 116. Ugh.
They started at a higher price.
Yeah, $1,595,000. Yeah, they were shooting high. Brought to us by Regina Vanicola. And let's see, on the listing side, Austin Brash, and on the buy side, Sergio Angulo over at Century 21. So I guess a win for both people. Might be a little slight disappointment there on somebody's side, but very nice house, beautiful views, and as you said, Darren, completely gone over.
Yeah.
I don't know if I told you this, but there is up there in that neighborhood, there's a family, I think, of like 5 coyotes. All the neighbors know them. And I remember looking over one time, and they were in the yard of this house. That was amazing to me. Anyway, so that is it for the final buyer win. And I guess we move on now to the new listings. Now I'm where we should be. New listings. All right. Let's go. New listings, 7 days. $36 listings. All right. Okay. So if you'd like to see any of these, there are open houses, and of course we can arrange a private showing. We know a lot of these agents, so if you are looking, feel free to let us know, and we'll try to help out. Darren, what looks interesting to you?
Well, let's look at Blake.
All right.
484 square feet.
The new trend. You saw that one today, right, on Morton Terrace?
I did.
Oh, God. All right. Well, here we are. Let's get it running. So 1282 Blake Avenue. This is in the Silver Lake Echo Park area. It's a 2-bedroom, 2-bath, 484 square feet on a, lot size of nothing more, barely more, 1,616 square feet. Listing at $850,000. This is 5 days on the market. Nice built-ins there. And gee, man, Lena Deneroff, Keller Williams Larchmont is the listing agent. So good luck. What do you think, man?
I'm thinking I want to live in the garage, man. Look at the garage.
That's beautiful. Actually, you're right.
Fantastic.
Right. So is that the plan? You're going to Airbnb? No, you're going to Airbnb the house. You're going to live in the ADU.
I think that garage work, it's going to sell this house.
Yeah. And he said it's like, it's plywood. It's not, but it was so well designed and so well done.
In these smaller houses, I mean, in all houses, but particularly in small houses, thoughtful design and build goes a long way.
Yeah.
A long way. Looks like they've done a good job here.
All right, guys. We'll see this later. We'll see what happens. Yeah, offers already due February 17th. So, what a great condo alternative or townhome alternative. Okay. So, and just to review that, I guess I know the answer, but maybe for some that are not aware. So, could that be an Airbnb solution for a new owner?
Technically,
and what do they need to do?
No.
Okay.
I mean, so with Airbnb, if you're doing there's two variations of Airbnb. There's 30 days or less. You have to register with the city. They come inspect your site. That one won't work here. Because if you have any unpermitted space, you can't. That doesn't work because the city's coming to view it. But 31 days or more, sure, that could be Airbnb. They're not going to show up. You're just going to take nice photos. So for that, yes.
Yep.
And Airbnb rates have been rising right along with everything else.
Yep. And maybe this isn't politically correct, but my advice would be to maybe on Airbnb only show the inside of the pictures, inside of the shelter there. Maybe you don't want to show the outside street view. You remember what I'm saying, right? Let's
sure.
See. All right. So where else? What do you see out there, man?
Let's do Ivanhoe Drive. It's a big jump in price. It's a nice property. 2461.
Yeah. Let's see. All right. Okay, 2461 Ivanhoe Drive. This is Silver Lake, 2-bedroom, 2-bath, 1,555 square feet of living space on a 13,255 square foot lot. $2,195,000 is the list price. Wow. Days on market 9 so far. This is brought to us by Simon Beardmore at Sotheby's. Beautiful house, good sized lot. Right neighborhood. Wonder if it has views to the lake.
I would hope they would have shown them by now in the photo
a little
gallery.
earlier.
So my guess is no.
Well, it says there, right? Spectacular views and streaming light. Yeah.
Well, there you go. It looks like a view of downtown there.
Yeah, it goes the other way. Yeah, it's right at that hill.
Yeah.
All right. Okay. 13,000 plus square foot lot located within the coveted Ivanhoe Elementary School District. That's my pet peeve, man. It's not a school district, it's a school. So everybody does that. Close to everything the neighborhood has to offer. This is Silver Lake living at its very best. Offers due. Boom. February 16th.
Tomorrow.
All right. Yeah, that's quick.
New listing too tomorrow. Well, see, we're not the only ones, man.
Okay. All right.
So
All
fast.
right. What's another one?
Well, Mitchell Terrace, every house in Mitchell Terrace is great. The entire street's amazing. So let's just go there. Price range.
All right. Yeah, I don't know if you saw one of our new clients, Darren, wanting to venture out over into Silver Lake.
I did see that.
Kind of a nice surprise. Yeah. 2207 Mitchell Terrace Street, 3-bedroom, 2-bath, 2,162 square feet, a living space, 2,200,000. It's on a 5,163 square foot lot. Look at that view.
That's
there
beautiful.
You go. There you go.
Wow.
Boom. It's sold. It is open house time there, 2/19. So what is that, Saturday? Yeah, Saturday. And that is 1 to 4 p.m. Days on market 4, and brought to us by Valerie McDonald at Keller Williams Beach Cities. You will go the distance if you're at the beach for a $2 million listing. Yes, you will. In fact, let's see. Yeah, 2,200,000. Well, the view kind of said it all right there. 2 floors of panoramic views from the Silver Lake Hillside home. See downtown, Hollywood sign, Griffith Park, or Griffith Observatory, Valley. Wow. Even the garage has a view. Look at that. Your car can enjoy the view. At the very end, in caps, fixer. Great opportunity to make it yours. Trust sale. Seller never lived in the property. Well, that's good. They have at least inspections, so they're trying. Okay. All right. Awesome.
Well, let's hop over to 4567 West Avenue 40.
Okay. I'm sorry. What is that? What's the address again?
4567 West Avenue 40.
Yeah. Okay. Oh yeah. I think we were. God, where did this come up in my conversations? So this is Glassell Park, 4567 West Avenue 40. It's a 3-bedroom, 3-bath. Oh, look at that. 1,884 square feet of living space on a 6,400 square foot lot, 1,189,000. 4 days on the market, and brought to us by Janice Ann Tronciali, Sotheby's. Wow. Looks good. Looks really good. Located in another good school district, Delvin Elementary, Sunlit Cottage. Public record shows 4-bedroom, 2-bath.
It's a big space at 1,900 square feet and priced well.
Yeah. Yep. Well, we'll see this go up, I'm sure. Okay. Let's see. What else do you see out there? Oh, there's Morton Terrace, if we want to continue that trend.
Go for it.
Yeah?
Sure.
Let's see. This is where you go to IKEA and you see how much living space you can fill with IKEA furniture. 1523 Morton Terrace. Is this Echo Park? Yes, Echo Park. Yeah. 1-bedroom, 1-bath, 576 square feet of living space, 799,000. Let's see. Open houses are Saturday 2 to 4, and then I guess Thursday 4 to 6 for a twilight open. 1 day on the market, and brought to us by Matthew Morgus. Hey, Matthew Morgus. And Rob Calick. That's interesting.
Wow. Haven't seen that name in a long time.
Yeah.
Maybe Rob's doing so good he decided to come back.
Well, there it is. Can you live in 576 square feet? But hold on.
Very, very livable.
Yeah. Any bonus space? Let's see.
Well, it looks like outdoor bonus space.
Well, great area. Obviously, a really old home there from the old days. Let's see. Yeah, it is what it is. All right. There you go. All right.
Let's do Quail Drive.
Okay.
693 Quail Drive.
Okay. 693. There we go. Okay. All right. 693 Quail Drive. This is Mount Washington. It's a 2-bedroom, 1-bath, 898 square foot home. And it's on a 4,500 square foot lot. $925,000. Opens are Saturday and Sunday. Saturday 1 to 3, Sunday 11 to 1. Days on market 4. And let's see, this is brought to us by Allison Gilbert at Normand and Associates. I guess that's well priced, isn't it, Darren? That's
It is. They've done some nice work terracing. It looks like they've done some retaining work. They've got a nicely appointed shed for a little office getaway.
Yeah.
I do think it's a good price, and that's a lot bigger than a lot of the homes we've been looking at already. So,
yeah, and a lot of updates. I'm reading here: copper plumbing, new electrical, 200 amp service, 2 car chargers. They're ready for the future. So great. Deadline for offers February 21st. Oh, that's an eternity. All right. Well, that's good. Good for us. All right. Let's move on.
I have no idea where this property is. Let's look. 3416 LaFleur. 760,000. So I'm curious.
I'm sorry. Did you say 3416?
Yes.
3416.
LaFleur. LIFUR.
Okay. 16. There it is. Oh yeah, I've never seen that street. That street name. Okay.
90032. So it's going to be El Sereno. It's got a detached 2-car garage.
Let's see. It's coming in slow. Come on, guys. Let's go. Let's try again. Waiting for the MLS. Come on, MLS.
Yeah, it's been slow today.
Yeah. Well, while we're waiting for that, 3416 LaFleur Avenue, 2-bedroom, 2-bath. It's 1,018 square feet of living space. Great price, $760,000. It's an El Sereno. It's on a 7,000 square foot lot. Orange County agent, I think. Days on market 6. And this is brought to us by Jessica Nieto, EXP Realty. That sounds familiar, that name. California.
I know a Jessica Nieto that I grew up with.
Oh, I've met her. Yeah. Oh, do you?
Have you? Sure.
Yeah,
so I wonder if it's the same one, but I don't know. Sure. It's very well priced.
Well, let's see if we can actually see it. Come on now, guys. Well, I may not see it. Let's see.
See, it's a good sized lot, a decent sized house, and it has a detached 2-car garage at the back. So it's got great potential.
It's zoned R2. Oh, there it goes. Large lot has huge ADU potential. Is located just minutes from downtown LA. Let's see, new roof 2022 with building permit. New windows, wall heater, sewer line 2015 with permits, 2-bed, 1-bath, detached 2-car garage, inside laundry room, tons of storage, lots of room to relax and entertain. Don't miss this opportunity. Take a tour with your realtor and make an offer today. So then it could be a junior ADU plus an ADU, right? If you really wanted to
Yeah,
shoot high.
sure. It's not a huge house to carve out a junior ADU, but it's doable.
Mm-hmm.
Yeah.
All right.
Well, cool. I think we should end on that. That's
Yeah.
the value of the day, the value
Yeah.
proposition.
Yeah, for sure. All right. Well, look, guys, let's see here. Boom, there we are. Anything to end up with, man? What do we got? Anything? Words of wisdom?
Just
Words of tomfoolery? Let's see.
You're going to have to follow the market and stay on top of it these days. There's things that have happened, big moves in the last couple of weeks, and there could be more big moves in the next month or so. So, stay the course a little bit, ride the wave, even if it seems like it's getting away, it might come back.
Yeah.
So, yeah.
And call us. How about that? Yeah, call us.
And hope for more inventory. Gosh, encourage people to list their houses.
Yeah.
We all need more inventory.
It's funny you say that, man, right? Because we do have these mask mandates being loosened around the nation. Everybody still be careful out there. But yeah, maybe that'll help a bit of the thaw for some when it comes to listing their home. I don't know.
Yeah. Inventory is good. Inventory is going to bring balance to the market. It can go up for too long, too far, and then it just puts more risk overall. I'm always about the stability of it. So we need some more inventory to bring stability.
Okay, guys. Well, look, we do have a new listing coming up probably within the next 2 weeks. It's Eagle Rock. It's a 3-3. It's on what they call a small lot. So it is actually very spacious house, but not a big lot. And beautiful views on a rooftop deck. So stay tuned for that. And we're happy to talk to you about that. So call us. All right. Have a great week. Take care. Bye. See ya.